I didn't have to talk to multiple people in siloed departments with multiple forms to fill out. One call did it all. As the one who was always looking out for my clients, it was a great change to know that my bank, Signature Bank, was looking out for me.
Signature Bank is looking for their next success story. To learn more about turning your business vision into reality, visit signaturebank.bank. Signature Bank, helping local businesses succeed. Member FDIC, Equal Housing Lender.
Hi, I'm Tom, a first-generation American, a man who loves God and America, and a longtime AM 560 The Answer fan. I, like many of you, am disgusted, dismayed, and deeply troubled by what is happening to our great country. We have seen incredible acts of censorship, suppression, marginalization, and outright attempts of socioeconomic destruction of American conservatives. It is now more important than ever for conservatives to connect, unite, and fight together. Our media are well past the double standard and bias. AM 560 and the Salem Media Group are one of the last vestiges for truth. We need to take action now. Please consider utilizing all products and services that AM 560 sponsors have to offer. These businesses do keep the power on. Contact an Answer sponsor today. I hope to meet you all someday as we fight to save the greatest nation on earth, these United States of America.
This hourly segment is brought to you by Papa Nicholas Coffee. Papa Nicholas Coffee, a family tradition since 1897.
It is 6:38 in the AM 560 traffic center. The latest with Jim Talamonte.
We have a rollover crash to report on Chicago's Magnificent Mile. It's a pickup on northbound Michigan Avenue at Oak Street, approaching Lakeshore Drive. Michigan Avenue is still open there. A rollover on the inbound Ryan Expressway cleared. We still see heavy delays right now, starting around 95th and continuing up to 69th Street. Travel time is 23 minutes from 95th to downtown, outbound 14. Outbound Stevenson traffic is packed solid past County Line to 83. There's a collision in the right lane. It's 37 minutes from the Lakeshore Drive to the Veterans Memorial Tollway. The inbound travel time is 28 minutes, 3:55 to the drive. Kennedy outbound, the exit to Montrose is closed until 3 this afternoon. I'm Jim Talamonte on AM 560 The Answer.
Chicago's Morning Answer continues next. AM 560 Weather Center forecast. Flurry this morning, otherwise breezy, considerably cloudy, and a high of 32. Right now, 27. At O'Hare, next news coming up at 7. Chicago's Morning Answer with Dan and Amy continues next on AM 560, The Answer.
From the Matrix Home Solutions Studios, this is Chicago's Morning Answer on AM 560, The Answer.
Listen to AM 560, The Answer, online at 560theanswer.com, on the AM 560 mobile app, and your Alexa-powered smart speaker, on TuneIn, iHeart, and radio.com. If you're looking for the latest news, insight into what it means, and the sharpest opinion, there's only one station in Chicago where you can turn, and it's this one. We're AM 560, The Answer.
Good morning, Dan and Amy. Only 47% left to go. Brutal. That was one Redditor's post upon the news that Melvin Capital, Gabe Plotkin's hedge fund that had to be bailed out by Ken Griffin and Stephen Cohen, we talked about last week.
Right.
Only 47% left to go. His reaction to the news that Melvin Capital lost 53% of its money under management in January. Not providing any quarter for the big boys like Mr. Plotkin. Now, the bad news is this impacts Michael Jordan. And we don't like when MJ gets caught in the crosshairs here. Michael Jordan didn't have GameStop shorts, but Gabe Plotkin from Melvin Capital is a minority owner of the Charlotte Hornets, and he reportedly was looking to offload more of a percentage of the Charlotte Hornets to Gabe Plotkin and another minority owner, or sell the team to them outright because he lost like $300 million last year because of the lockdowns and because the Hornets suck. And, the good news is
regrouping, Dan.
Michael Jordan, no red tag sales for MJ. No red tag sales for Michael. His net worth is still like $1.5 billion, but
Right, but you don't want anything to happen to him.
no, of course not.
I mean, come on.
We
Michael Jordan.
need to do whatever is required. Rewrite laws, provide protections to downside losses, anything to protect Michael Jordan, of course. But the question is about these Reddit renegades. Are these guys in white hats or black hats? There seem to be divided opinion. Like, for example, former SEC Commissioner Laura Unger, who offered this rather aggressive comparison.
It really puts a lot of question about the integrity of the market, right? And it really kind of, everybody's scratching their heads over this. What should happen? What is the right thing to do to control this or stop this? Not unlike what we saw on January 6th at the Capitol, right? If you don't have the police in there at the right time, things go a little crazy. And that's kind of feels like what's happening with this. Much different, much lesser degree. It's financial harm, not personal bodily harm. But certainly that's the same kind of, platform created frenzy that people are operating under. And these are very trying times.
Short selling for me, but not for thee. Is that it? For more on this, we're pleased to be joined by John Tamny, editor of RealClearMarket's.com, director of the Center for Economic Freedom at FreedomWorks, and author of the upcoming book, When Politicians Panicked. Golly, I wonder what that topic is. John, thanks for joining us again. Appreciate it.
Thanks for having me.
So the Redditors who hijacked Melvin Capital, they're akin to the rioters on January 6th?
I wouldn't say that. I question whether they hijacked anything. I think when it all comes out, it's going to become apparent that some pretty large investors had big stakes in GameStop. It was interesting hearing what Unger had to say. She said the police essentially need to be there ahead of time to make sure that these things don't happen in the markets. Well, let me tell you, if you can tell me when a stock is suddenly going to be bid up ahead of time, let's go raise billions.
Yeah, right.
Because we can do it we can do it this morning, and we will become billionaires in short order. The notion that regulation could have somehow fixed what was never a problem in the first place just speaks to the obnoxious conceit of those who operate in government. They are always last to anything by definition, because if they were first to anything, they wouldn't be regulators in the first place. They'd be making money as investors. And
let's take
their arrogance is astounding.
Let's just take a step back for those who aren't in this game. The useful function that shorts play in the marketplace. Explain. They're a very useful function. Shorts take the biggest risks anyone takes in any market, because when they're skeptical about shares in markets that have historically gone up, Americans are optimistic people. We've got great companies or markets. So shorts say the shares are going down. So what do? They borrow shares from an actual owner, pay them a rate of interest to borrow the shares. They enter the marketplace, sell those shares. That's when they're short. They sell them. They pocket the proceeds, and then they sit very nervously, hoping that their hunch about the stock going down is correct, because if it goes down, they then go back into the market, buy back the shares that they sold, and return them to the person they borrowed from. Their profit is the difference between when they sold and when they purchased. Now think about what a risky move that is, because if you're wrong, and if you're wrong on GameStop, your downside is unlimited. It can just go up, up, up. But if you're right, your upside is very small. So it's a great trade if you can get it, but there's a reason there are very few shorts in markets, because it's such a risky trade. But they perform an essential function because they provide pricing honesty. They provide skepticism when markets need it. And so do you have any sympathy for Melvin Capital and others who got caught on the wrong side of that position with GameStop?
Of course I do. I don't think they should be bailed out. Now, if Citadel and Point 72 Capital want to save them, they should. These are private institutions that want to do it. You're always sad to see it. Again, the hedge funds, if they didn't exist, we would have to invent them. They are rooting out pricing anomalies in the marketplace, and the more efficient markets are, the more the economy can grow. And let's point out a crucial thing in what I said about what shorts do. For them to profit, they must re-enter the marketplace and buy the shares they sold short. So people say, well, short sellers, they just sell things and they profit from it, and they ruin companies. No. When short interest in the market rises, that's a signal that there's a big wellspring of buying power entering the market. Because, again, for them to profit, they must re-enter the market and purchase the shares that they initially sold short. And so they're an essential. They put a floor under markets that are on the way down, too, because, again, for them to complete their trade, they must be buyers. They're ultimately buyers always.
But so what about for those Reddit renegades? Do you have any problem with what they did?
No. They have every right to play in a market and speculate in the market. I would just point out to them that if they think this is a trend, that if they think their buying can somehow move shares, good luck to them, because history says that it's hard to make money in the stock market. Who's the owner of Alinea in Chicago? Nick Kokonis was a great trader before he owned restaurants. And as he said, if you're a good trader, you're wrong as often as you're right. If you're a great trader, you're right 51% of the time. So there's this assumption now we can band together and beat the big institutions. Good luck. If you think you can do that, you're very quickly going to find yourself with very little money.
Well, don't you think? I mean, they feel empowered and emboldened. I think that they think they're going to take down hedge funds.
Yeah, no, I think they do. And I think that speaks to the concern that Robinhood hasn't expressed and some of these others that cut off trading in these shares. And some of this was obviously capital requirements. But anyone with a clue can look into the future. So people are saying, well, they cut off trading to protect the big hedge funds from more buying. Oh, please. What they reasonably did is they looked back to 2000. Remember back in 2000 when politicians were complaining, well, the little guy can't get into these tech IPOs, and that's not fair, and we've got to start democratizing access to IPO shares. Well, that's how they felt until a lot of those IPO shares went south. Again, it's a very risky thing. Does anyone remember the internet bust? Does anyone remember subsequently people being fined and people being hauled before Congress for having the temerity to fund companies that didn't work out? Investing is a very dangerous game, and so imagine what happens if all these retail investors pile into GameStop at, say, $325 and it goes down to $125 and they're wiped out. Does anyone think that Elizabeth Warren and AOC and Ted Cruz and all these other populists won't haul them before Robinhood, before Congress, and say, what were you doing allowing them to buy those shares then? So they can't win either way in this.
And that could still happen, by the way. Some of those that have gains, significant paper gains, a lot of those option contracts won't expire until this Friday.
Yeah, of course, and so they could still lose quite a bit of money. Now they can sell those contracts now. There's a liquid market for these things, so they can get out. But a lot of retail investors were willing to buy in at any price, and they said the price didn't matter to them. Well, that's what's always said, and that's what was said back in 2000. We want access, the same access that the big institutions have, but recognize that most often, by definition, new companies in a new industry, most of them are going to fail. Can we go back 100 years to the automotive industry? 2,000 car makers formed. Just about every single one of them died. The internet was the same idea 20 years ago, a great new advance that was going to transform our lives, but most of those companies weren't going to make it. And so when you allow the small investor in, you're necessarily putting the small investor at substantial risk.
So talking about the bailout of Melvin Capital, a lot of people are questioning, since the money came from sort of the financial king of New York, Stephen Cohen, and the financial king of Chicago, Ken Griffin, was a call made to Robinhood? Or were these titans tipped off that trading would be halted so that they could reposition? I mean, are those we don't know the answers to those questions, but are those legitimate questions to ask?
I don't think they're terribly legitimate, and they aren't for the simple reason that supply and demand doesn't play as big of a role in stock prices as people think. The assumption is they shut off demand so that the price wouldn't keep going up. It's not that simple. And if it were that simple, all you'd do if you were a weak company is you just buy back all your shares, or you would shrink the share count in total to limit supply so that the price would go up. It doesn't work that way. A share price is just a market speculation of all the dollars a company will earn in the future for all of its existence. When I was at Goldman Sachs, as an example, the feeling at the firm was that, in fact, there weren't enough shares in the marketplace. And because there weren't enough GS shares being traded, it was holding the share price down because no big institution wanted to hold something that was going to be difficult to unload. You need more float sometimes, more shares being traded so that your price can go up. And so Goldman actually asked its partners to sell more shares, to do a secondary offering to increase the supply of shares in the marketplace. They felt it would be good for the share price itself. So this idea that just shutting out retail buyers who aren't that big of size buyers in the first place was going to somehow limit the rise in the price of shares, I think is probably a bit of a reach.
Well, I was talking to some traders over the weekend, and one of the things that they said is, well, look, we don't know if there was market manipulation or not, but there's been a lot of instances, and they talk about it of mysterious things that happen in 4 a.m. Before trading opens, and it just sort of historically, and the idea that the biggest players on the market don't have the ability to rig the system to their advantage is terribly naive. And frankly, a leading indicator of that, I thought last week, was Adina Friedman, the head of NASDAQ, calling for more federal regulation. When does the head of NASDAQ call for more federal regulation of markets?
Well, I would say Adina Friedman has done that a fair amount, and a lot of them have pursued more regulation throughout time. And as far as this idea that the big players can rig markets, I submit to you long-term capital. I submit to you countless. The reason there are billionaire hedge fund managers is precisely because the vast majority of hedge funds fail. And so to assume, and Melvin Capital would be an example of another one, Ken Griffin is such an anomaly. The idea, and why do you think he put so much effort into this daily? This could be his last on a daily basis too. It's a tough business. And so this notion that the markets can be rigged, well, if they could be rigged, that again, people have to explain to me why just about every hedge fund ever formed has failed.
All right, John Tamny, editor of RealClearMarket's.com, director of the Center for Economic Freedom at FreedomWorks, author of the upcoming book, we'll look forward to this one, on the pandemic, obviously, When Politicians Panicked. John, thanks for joining us again. Appreciate it.
Thanks for having me.
Thank you, and he joined us on our turnkey.pro answer line.
This is Chicago's Morning Answer.
Your show keeps me alive during the week. There's nobody I'd rather listen to between 5 and 9 in the morning than you guys.
On AM 560, The Answer.
The Lou Dobbs Financial Report is brought to you by Signature Bank, helping local businesses succeed. Visit signaturebank.bank for your commercial banking needs.
I'm Lou Dobbs. Pipeline tunnel permits approved in Michigan. New York City indoor dining can resume 2 weeks from today. And Subway's tuna salad under fire. Those stories next. Lou Dobbs here. Looking for predictable monthly cash flow? Is the potential of 10% annualized immediate monthly payout good for starters? How about bonuses targeted to 21%? If you want the safety and security of a real estate investment, but without the hassles of being a landlord, you've probably heard of NRIA.